You are already knowing. Once again, we are back with the Hollywood trades. NASDAQ today. In indices, I haven't done an update in a while, so I need to do just a full overview. Markups still remain the same. I actually haven't been marking the charts. I've been really busy. As some of you know, I actually am building a few things, so I haven't been fully available, but doing my best to keep everyone on track here. Everything has been right on schedule with markups that are already here. So I wanted to get on, and before I change some of these markups, I just wanted to document this because it's very important for me, just so everyone knows that I changed these markups very selectively. Now, there are a lot of things you can always mark on the charts, but when you clean the charts up from markups like these markups are already been hit. As you guys know, my X is places that really need to be hit. Those that's what I use this X marks the spot for. That has been hit. That has been rebalanced. I really don't even see a need for this. So what I'm gonna do is, and I wanted to get this documented, that I took this zone and repurposed it, because this is pretty much a mitigational zone. This block right here, as we fall, this imbalance plus this block is what I will be interested in. Of course, this is the break right here. This and this are the break. So we'll look for the retest, right, of breaks, of major breaks. This would have been that, but I'm going to move that over. I'm going to take this because this is a gap between last week's. This is last week's new week opening gap. This is new day opening gap. So I'm going to go ahead and just color it as one of these voids here because it's not the new week's opening gap. The new week's opening gap is actually here. I'm not exactly sure if I want to mark this gap. This area is the point of control on the volume. So I want to more so focus on just this point of control and just the overall pivotal action here, possibly coming into a rebalance of these imbalanced zones. As some of you may know who follow the imbalance narratives, these what I call naked body candles. There's no wick to the left or to the right. There's a small wick here, but below this wick, there's nothing here and there's nothing here. So this is an imbalance zone as well as this. So this imbalance is being activated right now, or I should say rebalanced, corrected. That is what a correction is. Actually, I don't want that, because we're gonna go ahead and I'm actually gonna use this candle's top as the break point. Actually, this candle's top is the break point because it has two daily tops right there. So I want to know what price is going to do right there. Let me fade this to the back. I don't know why that's sent to the back. Right. Okay. And so now we have PI, of course, that algo, this algo level here. Support and resistance level is still very much active. So between this and this zone, this is very conspicuous retest levels down below. As we know, we'll be monitoring what happens at the lows. Right now, we're at current of this session failing to displace below this low. But as we know, right, we look like we want to close below this. And if we do close below this, it will turn this candle into a sharp, very neat. A lot of people who study classicals in candle formations, these dojis right here are pretty much letting us know what happens is these levels are compressed. So we use in the bar method break and retest of what? Every candle, high, low, open, and close. And when you get a compressed candle or block like these, it's very easy to overcome these levels one way or another. So whether it closes here, it closes there, it goes high, it goes low, they're really compressed levels. So you just get a really sharp reference point for what the price wants to do at these candles versus bigger body candles like these, where you kind of can meander inside of the inside mother candle or inside day or inside bar. You can kind of get that. But with dojis, you get a very sharp and clean outlook for what's going to happen in the range because the candle levels are so close. And that's why dojis are so potent and why they cause such an inflection, whether it's a continuation or a reversal around the levels, just in case you never really thought about that. So again, we have the point of control, we have an imbalance range. I'm not even gonna paint these imbalance ranges. I don't want to see that in this range. What I want to see is I really want to see it come to this level here. This is a previous all-time high level as well, which was way back over here. This was a very neat level. It supported price. The levels that I pick for marking up are very particular because that's just how you have to be. You have to really kind of pick your levels because there's levels everywhere. Each candle is a level, each range is a level, each so on and so forth. So that's pretty much it for the daily. Let's go ahead and just go up one. Let's go up one so you can see. Oh, what? X marks the spot. This is a new markup right here. This lock, this unlocked lock is a new markup for me. It's the idea of the level that will allow price to, after it takes the level, it'll allow price to freely move in a continuation after that. So it's a point of release is what I call it. And this was what I was thinking, that once it got above this, it would release and just allow price to go. And sure enough, it released from here to this flat bottom highest bullish candle. The highest bullish candle is the one that you're usually wanting to target if you're going back into a correction, this was a downward action, then the upside move is a correction, which is a higher time frame continuation as well. But for sake of comprehension of impulse correction, we'll say that this was an impulse and this was a correction. And so what we'll get here is just a sharp return to that, smack that bottom. And a lot of people were wondering when I showed my markup here whether we would get there. And this markup, like I said, I like to document my markups because of that, so people don't think like, oh, he's just making markups. And in hindsight, nah, I like to document it because of that. And so, and excuse my sinuses, it is that season. Excuse me. And so I'm going to go ahead, and I'm no longer interested in this markup. So I'm going to clean that up on this chart. I'm also going to repurpose, because that void actually did get pushed forward. I'm not going to draw it over because it's just going to muddy my markups just too much. What I am going to do is this. What do we make the low of the highest candle? We want to see what happens there. So I'm going to put the little devil testing level right there. This, I don't know what I want to turn this into yet. There is a reaction here. And this is a bearish order block on the weekly, proverbially speaking. And there is imbalance. There is imbalance. This is the highest candle. This is the all-time high week. And the low of that week is the rebalance part. So what I could do, what I usually do here is this. And we'll call this weekly. Can I, never mind. We'll call this weekly balance. And I like to do this again on camera. And so what I'm going to do is I'm going to allow this to be visible, which I don't usually do. You guys know I keep my markups. I'm going to make current interval and below so I can see this level. I want to see this exact, and I want to make sure it's correct. So when we get to those lower time frames, like the minute chart and all of that, I want to make this really accurate. How do we do this now again? There's the command key. There we go. Okay. Yep. So I'm going to make that really accurate right there. And so that's pretty much that. Everything's looking nice and neat. We are going to probably most likely remain an inside bar here unless we sweep this, rebalance this, and then turn back over. And then I'll definitely be, I mean, that's just an easy retrace, retest, correction. That would just be an easy. While we have not took any of the pending orders out of this level, we will potentially just see, a downward meandering action. It usually is a lot faster when you take these orders out and then rebalance this. And then it'll be a rebalance range. My business partner just logged on. I'm not gonna say hi to him yet, but I'm gonna finish this up with the hour chart. Actually, no, let's look at the hour chart. I don't have time to really mark it up how I want to, but what we're gonna do here is this. Because we did close over this bar, what we're gonna do is mark this as an order block. And by the way, this is gonna be neat. Here we go. Where do we go? Where do we go? Anchor note, image, choose image. The Hollywood Trades Price Motion Handbook is almost finished. The website is up, and I'm very proud to be able to help with this and help everybody come along very well in this market with greater materials and resources, easier to understand. And it's just the same things that I explain in YouTube. So it'll help a lot of people who are new follow along. It'll help a lot of people who have already been in the market kind of tune up a little bit on the things that I look at and the things that the candles are telling you. So digressing off of that, we do have a new order block, but we don't have a displacement. So we are now propulsion block or rejection block to order block. As we see, we did get a reaction off of this somewhat of an order block type of deal right here. I'm going to go ahead and mark this level because that level is going to be a bearish level. So bearish key level, I'm not going to mark it. I usually try to mark the range high blocks as order blocks and the range low blocks as order blocks, and then just mark those bearish levels and bullish levels as they happen. This is an auspicious zone right here, but I'm not going to too much focus on it. I'm going to leave that there. This is the hourly chart point of control here. And so there's a lot of orders in this range. Anything can happen. This bearish continuation on the higher time frame is what we're looking for. It is a Monday. So with this being a Monday, we are going to go ahead and call it what it is. And this right here, I could mark as an order block, but I'm really more so interested in this right here as a bearish imbalance. That is what we're interacting with at the very moment. I'm going to go ahead and put that midline on there too. As we know, those 50% do some strange shiznit from time to time. As I call it, algo magic. We do also have a bullish order block right here. Right here, bullish order block here. And we also do have an IFVG right attached to that, which is here. So we have had a reaction to this, what I would like to call flip zone. Now, the flip is a little bit faster than a regular IFVG. Like if this got rebalanced and closed over, I would call this an IFVG, but this is more of a 1-2, like boom, boom. So I like to call those the flip zones. As we come back into those, you expect it to not close below this zone. Once you're testing this whole support region. So everything is kind of, excuse me, everything is kind of moving right along the bullish narrative. Again, we do have a bullish block right there. And so bullish key level right there as well. All right, and then we have an imbalance. I am going to mark this imbalance because it is the latest imbalance that we have to work with. And so that's pretty much it. We're 16 minutes in. I don't like to really go too much further past 15 minutes. So that's pretty much it right now. We do have, again, bearish imbalance and bullish imbalance right now. So it's going to be very interesting to see what happens. As we see, we are getting a very sharp response to this bearish zone here. All of this is bearish as well. This whole thing, as we've seen on the higher time frame, is a bearish block on the higher time frame. So that's pretty much it. Go ahead and hit the comments if you have anything that you see that I might have forgotten. And with that being said, we are going to be out until next time. Don't forget to hit that subscribe button as well on YouTube.